Abu Dhabi's IHC tenders for a stake in Colombia's Grupo Nutresa, and Russians were Dubai's top non-resident property buyers in Q3. You're watching the Daily Brief with Forbes. I'm Ramya Faraj. Abu Dhabi's IHC Capital Holding has launched a tender offer to acquire a minimum of 25% and a maximum of 31.25% of the shareholding in Colombia's food processing conglomerate Grupo Nutresa for $2.8 billion. The results of the tender will be known by November 18th. The move is part of IHC's long-term investment plan in South America. Earlier this month, IHC entered the market with a $200 million investment in Lulo Colombia, the holding company of Colombia's first regulated digital bank, Lulu Bank. Russians were the top non-resident buyers of residential property in Dubai in Q3 as they seek a safe haven, fleeing the war and the military draft. That's according to Better Homes, who say Russian non-resident buyers increased 11% from the previous quarter. The growth rates indicate prices are stable and sustainable, although pockets of rapid growth remain in certain key communities, with the Palm Jumeirah seeing the highest price growth at 10%. Shares of Tesla declined more than 3% after it fell short of expectations on its Q3 revenue, though it did beat estimates for earnings and profit. Tesla reported $21.45 billion in revenue for Q3, below the $21.96 billion Wall Street expected. Its nearly $3.3 billion in quarterly profit did beat estimates of $3.2 billion, though, and came just short of the record profit of just over $3.3 billion reported in the first quarter. Elon Musk says he's excited about his pending acquisition of Twitter, although he says he and other investors are overpaying for the social media company. The world's richest person is pursuing the Twitter purchase after earlier trying to back out of the $44 billion deal. Musk described Twitter as an asset that has languished for a long time. Nokia's Q3 operating profit came in below market expectations, even as the Finnish telecom equipment maker continues to benefit from strong demand from phone companies as they roll out 5G. Third quarter comparable operating profit rose to $643.3 million from $619 million last year, but that lagged the $675.68 million mean forecast of 10 analysts polled by Refinitiv. Net sales grew 6% compared to the same period a year ago to $6.11 billion, beating estimates of $5.93 billion. And Swedish telecom equipment maker Ericsson's Q3 earnings missed expectations for the second quarter in a row as margins took a hit from higher component and logistics costs. Ericsson's quarterly adjusted operating earnings fell to $633.05 million from $780 million a year earlier. Ericsson's quarterly revenue, however, rose to $6 billion from $5 billion. Global smartphone sales have slumped this year amid a gloomy economic outlook, prompting people to spend money on essentials instead of the latest gadgets. Research firm Canalys says smartphone sales in Q3 were 9% less than in the same period last year, hitting a low not seen since 2014. Canalys expects that situation to continue to dampen smartphone sales into next year. Apple has an 18% share in the global market and Samsung has a 22% share. I'm Ramya Faraj. This is the Daily Brief. Thanks for watching. Bye for now.